Hey guys, it's Mark Kuhn. Hey, I want to give a warning for all investors and some of the reasons on why I sold all my stocks in crypto just a couple days ago. Um, Basically, guys, I'm Mark Kuhn. I am passionate about helping you keep your money in the upright position and grow your money and grow your wealth. And I want to get on what the heck is going on in the markets right now. We're off to the worst start since 2016. Um, Guys, the supply chains everywhere. There's disruptions everywhere. People can't get things or logistical issues. You can't get anything if you want it right now. I think Amazon to shipping containers to anything that you want to get. And this is causing inflation to create a wildfire in our markets right now. And so, how did we get here? Well, there's actually two ways we got here. Guys, the money printing that has produced over, or just the amount of money printing that the Fed has produced in the last, I'd say 16, 18 months, has basically been almost 40% of all US dollars. Now, how did we get all those forms of, well, we got stimulus checks, and we also had the markets or bond buying from the Fed at astronomical rates. So we basically had them stimulating the market and handing us all free money. Again, now we're paying for it through hyperinflation. It's not a hyperinflation yet, but we're in the process of 7+% inflation in the month of December. So crazy, crazy amount of money printing going on. Ironically enough, 40% of American adults wouldn't be able to even cover a $400 emergency with cash, even after all that money printing and free money came out. So something kind of interesting there that most people wouldn't know. So in 2020, just for instance, example, we had about $4 trillion in circulation in the U.S. Now we're at a staggering 6.7 million. And the printer is still printing that money. So super interesting, but $2.7 trillion just come into existence in the last year or so. So, all right, guys, what's the second thing that caused this huge inflation problem and the supply chain disruption? Guys, the number two thing, they dropped the interest rates to near zero. And what happened then? It flooded the markets with refinances and locks a ton of money. It creates basically a rapid rise in all your commodities, your financial assets, stocks, bonds, homes, and even your crypto. Everything gets inflated when they drop the interest rates. There's so much more money out there. Your money goes so much further, right, for a short period of time. So now the Federal Reserve is obviously in a pinch. That's all to say. And I believe January 25th, they're coming out with their master plan, which is today, and they want to, the Federal Reserve's plan is to meet about basically how to get the inflation back down. So do the opposite. Don't print as much money, bring up interest rates, right? Not, sounds easy. But here's their initial plan. Basically, 3 times in 2022, they want to click rates at 0.2 or 25 basis points, which is 0.25%. Doesn't seem like a big deal. However, these are drastic changes from where we're at. We're just above basically 0% in the Federal Reserve to borrow money. So 3 inflation, so that's one of their plans. They also will be tapering at an extreme pace. So basically, what is tapering, I guess? What does that mean? So I kind of put the example of, imagine that you went to college and your parents supported you at about $1,200 a month. You just left high school, you're going to college, $1,200 a month we're going to give you starting in month 1 to help support yourself. Well, starting in month 2, they're going to give you, they're going to reduce that $1,200 amount by $150 each month. So basically what they want you to do, and then every month after, they're going to keep reducing by $150. So what they want to do is help you kind of self-support yourself in trying to figure out your own wage. And if you know this is coming, you can kind of figure this in. And now how this is happening in today is exactly, basically the Fed was printing money at about pumping money into the stock market about $120 billion into the economy each month. And now their plan to help lower the inflation rates or inflation percentage, they're reducing it by about $15 per month. So, however, they did this starting in November. It's now January, and in December we had the highest inflation reading that we've had all time. And so now they need to step up the taper, right? We need to go from 15 billion reduced each month. Let's step it up to 30 billion each month. So then in the month of January, now they're up to 30 billion a month to try and get the trajectory of the inflation rate to go downward. We're at 7% right now, astronomical. So now the markets have been kind of slowly declining. Not slowly, we've been kind of steadily declining. And basically the market's planning for what Jerome Powell will say today in the Federal Report, which I will give another update on this and a summary of this tonight. They need the inflation to reflect downward quickly as possible because 7% is crazy. 7% is what they're thinking. I guess probably in reality, we're probably at 15, 20% inflation. It is crazy right now to get anything. And the last time to be at 7% was actually 1982. So guys, there's a big problem in our economy right now. You all remember in 1982 when your parents were telling you these stories of we paid 20%, 18% interest on our homes, and of course they were getting so much in their savings too as well, but we all remember those stories, and this is kind of what happened. They had to raise the interest rates to help get inflation reflecting downwards. So how can you help protect yourself from all this inflationary times and basically try to get your money out of the stock market to try and help protect yourself, because we're going into a correction basis now. We need to figure out how to get the economy to operate without all of the support from the Federal Reserve. And they're coming out with a plan again today, so I will keep you up to date on that. You want to get invested, something that protects you from the stock market and inflation. And one of those ways I do that is I invest in real estate, and my goal is to help others to hedge against inflation as well in the form of real estate. So one of my big things is that I try to educate people on why I invest in real estate and how you can do it as well. Remember, real estate will give you cash flow benefits. It'll give you preservation of capital. There's lower volatility. There's ability to leverage your money. You can actually borrow money, so your $100,000 could be worth $400,000 in real estate, right? All good ways to prevent you from inflationary periods like right now. Because you're going to get appreciation. And when there's high inflation, there's high appreciation because everything's going up in cost, right? So, and maybe one of the main tax reasons, the greatest one of all, that some people buy real estate just for this reason alone, is all the tax advantages. Think about all the taxes that you pay each and every year, and people have side hustles and side businesses as well. Real estate is a side business, and it does provide you cash flow. And you don't have to be full-time in the process of doing the side hustle, right? Like, you can get all the tax advantages of writing off your phone, writing off your computer, writing off an office in your house for property management. All these things you can be doing just with a property. And so, guys, at the end of the day, real estate is how I'm hedging against this. This is my bet against, not my bet, this is what's worked for me for the last 10 years. Inflation is real. We're feeling it right now. The money printing is stopping, and the stock market is out of control to try and get this back in check. And the Federal Reserve is doing everything it can to get the inflation to reflect downward. So we want to see, they need to inflect their interest rates upward, right? So you guys need to get yourselves ready for a bumpy stock market. It's going to be trading sideways probably for the next, for sure the next 60 days, guys. It is going to be a super bumpy market. And plan for probably a pretty flat flat to maybe it might have a little bit of growth back in it, but it's going to be a pretty flat stock market the next few years. You're not going to be making 20+% in your 401ks. I just sold every stock in crypto I owned. I do have a plan to get back into the stock market, and just on how my approach is going to be now, just because I really don't know what's happening, and it's just a lot of pain is going to come through in the next probably 60 days. It's going to be very volatile. So, but purchase some real assets to keep you in front of the inflation curve and help reduce your tax liability, because one thing you can bet on is that the government is coming for what they have to, with everything they stimulated the economy with. They need to get it in the back in the form of tax money, or they need to get it in the form of, inflation, which is the secret tax, right? And so, guys, get your money to work. Money to work in a safe spot. Real estate is one great, phenomenal way to leverage your money, get appreciation due to inflation. So, guys, thank you so much. Please subscribe to this channel. Give me a thumbs up. I need this for the YouTube algorithm to help boost these videos. I'm going to be providing much more content for you. And if you can put in the comments below, just tell me what's your plan in 2022 to hedge inflation and all these supply chain disruptions. It's very hard to find margin right now. So what is your plan? I will see you in the next one. Thanks so much, guys.